How to trade volatility and the VIX. I am Don Kaufman. You are watching a TheoTrade presentation. A quick risk disclosure: we're not financial advisors nor a broker dealer. Well, we throw that up there, and I always mention the not a broker dealer anymore. I'm thrilled about that because I spent about 15 years of my career working on the brokerage side of this business. Copyright disclaimer: this is ours, this is not yours. You must have the express written consent of the National Football League before reproducing this. Yeah, football's coming back. With that, though, the copyright disclaimer, the other thing I'd really like to throw on here is this. This is where we're located. Again, we are a Arizona company, located right here in Scottsdale, Arizona. But if you ever need to get a hold of me after this evening, right here, support at TheoTrade.com. We use a common inbox. By the way, all the instructors here use the exact same email address, support at TheoTrade.com. Just put Don Kaufman in the heading. People always say, I want to be able to get a hold of you after. We answer emails. I know it's shocking, but we do. Here is a little bit about me. So I'm the co-founder here of TheoTrade. I started trading options, and I started trading in general in the late 90s. I actually come from a family of traders. I had a family that traded back in the 1970s in the Chicago Board Options Exchange. At one point, my family owned over 500 seats on exchanges around the world. They eventually sold the company to the Swiss bank, which became UBS. That's a little background. It's kind of how I got involved in the industry. But a short time after my trading career began in Chicago, I was actually invited to a startup brokerage firm called Thinkorswim. I believe I was number 12 at Thinkorswim, an employee number 12 at Thinkorswim. I went on, helped take the company public. I actually ran the entire education. I built the education division of Thinkorswim, which actually drove us to become effectively a public company. We then did the acquisition. We were acquired by none other than TD Ameritrade. I went on to head education at TD Ameritrade from roughly 2010 to 2015. When I finally retired out of TD Ameritrade, well, I got a little bored. About a year later, we launched none other than TheoTrade. So that's a little bit of background on me. I've done a couple of CNBC tours over the time. This is obviously one of the more memorable ones. It's Kevin O'Leary, Mr. Wonderful versus Don. So, hey, it's befitting, right? It was Shark Week. It's Mr. Shark over here versus Don. With that, a little bit about TheoTrade. We specialize in education for stocks, options, and futures. Everybody on the crew here has got a minimum of 15 years, okay, of trading experience. A few of us with a couple of decades under our belt. But that is important because you got to know that everybody that you're talking to here at TheoTrade, they have 15 years of trade experience under their belt. We're here to help you mitigate the risks in the market while learning a skill set that can last a lifetime. Speaking of experience, here are the TheoTrade instructors. TheoTrade, it's not just myself here, Don Kaufman. We've actually got depth to this team. So we've got myself, we've got Jeff Bierman. Jeff actually worked with us at Thinkorswim and TD Ameritrade. If you've ever been on the Thinkorswim charts, Jeff actually helped put over half the studies onto the Thinkorswim charts. So his kind of claim to fame over there. He was actually the chief technician for TD Ameritrade. By the way, Jeff Bierman is also currently a professor at Loyola in Chicago, professor of finance. Next, we have Matt Williamson. That's our market neutral premium selling option strategist. Corey Rosenblum. I've known Corey for a long time. He's our senior strategist, kind of resident swing trader. Then Brandon Chapman. Brandon also worked for us at TD Ameritrade in the education group. All right, macroeconomics, technicals, fundamentals. Next, we have Steve Slim Miller. I've actually known Slim a large portion of my life. He's a 43-year veteran stocks, options, and futures trader. Slim actually started on the floor of the Chicago Board Options Exchange in 1973 when it was first launched. Last but definitely not least, we have our intraday strategist, Tony Rego. Just scalps NASDAQ futures throughout the course of a trading day. These instructors, they're in here right now, meaning that you can ask questions throughout the course of this session. With that, let's get down to it. What are you going to learn tonight? What are you going to learn in this presentation? You're going to learn about trading volatility and how to create volatility-based trades. Now, We're going to look for trades. You could risk one, okay, to make up to 4. In fact, the trade that I'm actually going to show you tonight's risk one to be able to make 5 with 0 upfront costs. And just so we're all clear, I don't show any trades tonight that I do not have on, that I do not have capital at risk. I have capital at risk in every single position, okay, that we're going to display this evening. They are all, okay, definitively real trades. I also have never had a problem, okay. I like to pull up live trading accounts. The S&Ps are down 9 right now. This happens to be Think or Swim. If you're with a different brokerage firms, that is fine, okay? I know this platform well. I helped construct a lot of the analytics on this trading application, so it's kind of stuck with me over the years. Nevertheless, we're going to talk about how a detailed understanding of volatility can provide advantages, okay, in all of your trading strategies. This is not just about like, let's learn one strategy, okay? We're going to discover how trading VIX options can actually help reduce portfolio, IRA, or 401k risks. I have to ask this question because, I try with these, kind of events that we do every couple of weeks, and I try to hammer this. This needs to be timely. Anything that I'm presenting here, this evening, when I say timely, this is the trade that's in play right here, right now. How many of you felt a little pain in the volatility that we've now experienced over the last 4 or 5 trading sessions? It's okay. These are not rhetorical questions, right? It's okay to say, I feel the pain, right? Because that's what we're kind of here to discuss. It is relatively, straightforward, to control those risks of the previous 5 days. And I'm going to show you that here in no time at all. We're going to also discover one strategy you need in today's marketplace and why the trade it's always being used by the biggest firms out there. In fact, I'm going to show you that here momentarily. Okay. First thing we have to ask is, why do you want to trade volatility? Now, you can't answer yes to both of these questions because it's one or the other. And it's okay to be one or the other. Do you intend to use volatility to reduce risk of a 401k, an IRA, or stocks portfolio? Okay, I want to make this very, very clear. Option number 1 up here, and I want to know who you are. Option number 1, says, I am here to reduce risk. Option number 2, this is somebody, I'm just trying to hit a home run, right? You're trying to profit, in case the equity markets decline and the volatility increase. So if you're out there trying to, this is what we call reduce risk, which is a hedge, Are you a hedger? You could say reduce risk, or you are a profiter. You got to be or you could just put 1 or 2 in there. It's all right, and as I said, you can't really be both. And why can't you be both? Because if you're trying to profit from a declining market, increasing volatility, what's your 401k doing? You're like, I'm getting killed. You can't be buying stock with one hand, and then trying to profit from the market tanking with the other, because eventually the two, that does not work well. It's okay. Know who you are. Define who you are, right? And that's what I'd like to start with tonight. And for that, I think you need to understand volatility. So whether you're trying to reduce risk, you're trying to reduce exposure in the markets, or you're trying to profit from a rise in volatility, literally everyone involved in markets, you have to be able to have, kind of a detailed or a finite understanding of volatility. Without it, you're blind. People go, I don't need to know volatility. Really? You want to go out there and buy some Apple stock and not understand volatility? Because the last couple of days, and I just pick on Apple for a couple of seconds, because the last couple of days, the only thing describes Apple, is just hideous. That's the only word. It doesn't matter whether you were long, whether you were short, You could have been a duck, a chicken, a snake. It doesn't matter what you were the last couple of days. It was hideous on both sides of the trade. If you understood a little bit more about its volatility, it's going to help you exponentially. I love the comment that just came into the chat. I want my mommy. That's basically what describes, I love it. That's what describes Apple the last few trading sessions. Trading, okay, volatility products. So before I give you that detailed understanding of volatility itself, people always they just assume this guy's going to talk about the VXX and the UVXY and trading volatility products. Okay, trading volatility products, it's really straightforward. But have you seen UVXY over the last 3 years? Some people might not know what UVXY is. Don't worry. I'm going to show you here in a minute. But buying any volatility product outright is a recipe for disaster. Most volatility-related products have lost over 90% of the respective values in the last 3 years. You want to know what trading volatility products looks like if you buy a volatility product? Right? Anybody? Right here. The decline of any volatility product, it's inevitable. Okay? These products themselves are based on volatility futures. And those volatility futures, they naturally decline. This product, okay, when I say product, by the way, people don't really know that word product. I don't care whether you're trading UVXY, whether you're trading VXX, it just doesn't matter to me, right? It literally was at 2,000, okay, 610. Now, okay, it's down here. It's lost 98% of its value. Now, some people will go, yeah, I don't trade that. That thing is dangerous. Okay, some people will trade a product called VXX. Okay, you want to know how messed up the VXX is? It's such a messed up product, okay, that they had to cancel the initial shares. And then look very carefully on your screen. They got rid of the VXX. Now it's the VXXB. You know what the B is? Because the first one failed. It effectively, they canceled it. All right. So if you look at this over a 3-year chart, that's not that bad. That's because the first one got canceled, meaning that it actually went belly up. So it's, again, brutal when people don't understand these products. Now, let's give you a little better understanding of what is volatility. So there's a lot going on this particular slide. Let's break it down really quick. First of all, anybody can go out there and trade a stock. I always like to make an example of stock. All right. So it's a stock named stock. And stock is trading at just $100 stock. Now, what's the volatility of the stock? The volatility of that stock is 20%. What does the 20% really mean? It means that stock is supposed to move up about 20% or down 20%. And it's supposed to stay in that range, okay, 1 year from now. So 1 year from now. And there's about a 68% chance it's supposed to stay in this range. That is what volatility really is. It's actually what they call standard deviation. Now, blank the screen for a second over here, because if you've ever heard about standard deviation, everything you do in life could fit under one of these bell curves, right? So here's the bell curve. In a bell curve, when I say everything you do in your life, there's really, really good drivers and there's really, really bad drivers. Okay. Then there's California. Oh, I had to take a shot at you guys. Come on. Right. But most of us, we fit in what we term the meat of the curve. We fit in the happy place in here. Well, that's what volatility is. Okay. And this volatility number, it's constantly going up and going down and going up and going down. But volatility, it's not what people always make it to be. It's not just about movement. Okay. Volatility can be translated, okay, into stock price movement. You guys want to see volatility really quick? Let's do it. This, okay, is a trading application. I'm just going to pull up Apple. Bear with me. Here's Apple. 10 days from now. 10 days from now. Now, how do I know it's 10 days from now? Because it says right here in the options chain. Now, some of you do not trade options. It's okay. How many joining this evening, okay, do not trade options or have never traded options, okay, or really have never had any experience, okay, with options? Anyone? Come on. Who here? If you've never had any experience with options, one of the great things about options that's always missed. I'm not telling you right this second that you need to trade them, but I am telling you, okay, without unequivocation, that you better understand them. I'm going to say that again. You better understand options. You can't trade stock anymore without understanding this. You want to understand this? Okay. The options market says in the next 10 days, stock is going to move. Forget this 34%. Stock's going to move $9 higher or lower. Okay. What is that? How could it possibly do that? Did you know that there's billions of dollars, okay, right now saying it's going to move $9? What do you trust? Do you trust like looking at a chart, or do you trust billions of dollars being traded? The standard deviation says the stock's going to move up $9 or down $9. That is what volatility really can do for you. That knowing that is huge. Okay? That's what volatility really is. It's equated, okay, to stock price movement. Now, to continue on, again, I wanted to give you something that you could literally bite into and leave with that kind of knowledge. Now, a little VIX background, because now we're going to start to talk about the VIX. Now, how many of you here have heard that term VIX? Okay, because I just did a quick minute or two on volatility. What did I say? Okay, this is volatility. So what's the VIX? Okay, what's the VIX? The VIX, it actually started as a calculation of volatility, okay, on the S&P 500 options. Almost everybody, if you turn on even CNBC, they're like, the VIX did this, the VIX did that, the VIX did this. Most people have absolutely, unequivocally no idea what the VIX happens to even effectively be, and yet they hear them all the time. Like, everybody mentions the VIX. I don't care whether it's Bloomberg, whether you're watching CNBC, you watch any mainstream media, they're talking about the VIX. So you should probably know something about the VIX. So the VIX started as a calculation of implied volatility on S&P 500 options. Okay. The VIX was originally introduced in 1993. It's been considered by many to be the world's premier barometer, okay, of market volatility. Investor sentiment, yuck. All right, market volatility. It's the barometer of market volatility. In 2006, though, options on the VIX began to trade. The VIX, okay, index is implied volatility index that measures the market expectation of 30-day S&P 500 volatility implicit in the prices of near-term. Listen, this is just, you know what I threw this down here for? This is like the geeks and the attorneys. That's what we threw that down there for. But let's get down to it. Okay, what is this thing, the VIX? All right, first of all, markets down, VIX up. Let's actually go over to a trading application for just a moment. Okay, and on this trading application, all right, we're going to look at what's termed SPX. The SPX. This is where the VIX was born. What I mean when the VIX is born, what the VIX really is, it's nothing more than an equation. Okay, and that equation is, it's about volatility and option volatility about 30 days out. Okay, so what's the VIX? Well, the VIX should be somewhere around the 30-day volatility. It's about 20% right now. If you took a look at the actual VIX, look, there it is. It's 20. Yay! The VIX is at 20. Okay, so what is the VIX really saying at 20? Like, that's the thing that you need to be able to answer. What's the VIX really saying at 20? Anybody? Okay, because I've got this nice distribution curve. All right, we can look at the VIX all day. Look at the VIX, look at the distribution curve. Listen. The SPX right now is what? It's 2,881. I'm telling you exactly what it says, okay? What the VIX is kind of dictating, it's actually saying that this SPX, which is at what, 2,881, it's supposed to move up about 20% or down about 20%. And it's supposed to do that, okay, within what? About 1 year. But that VIX, it's always kind of fluctuating higher or lower. Again, this VIX gives you a great temperature, if you will. Kind of it gives you a temperature for how hot or how cold that marketplace happens to effectively be. And I'll give you another example here. The way that the volatility of markets really works. See, a lot of people think that volatility, if this is the SPX, a lot of people think volatility is just movement. Let me ask you something. Has the market been moving a lot lately? Oh, the last 5 days has been huge. But if the market goes up, okay, VIX actually goes down. Why? Because most do not, feel risk because they own stock. So when the market's going up, most of the time, volatility is falling. But because you can't just come in here and say a blanket statement, like, hey, movement is volatility. Well, you know what? Okay. The way I look at it, that was a lot of movement. Okay. Look, that was a lot of movement. Yeah. This also took the volatility and crushed it. If you look at the VIX in the exact same time frame, look what happened. The market moved up huge and the volatility collapsed. And the volatility collapsed. Okay, every time the market moves up huge, the volatility does what? Collapses. Keep that in mind. Okay? So when the markets are going down, then the VIX goes where? Up. Again, a great, very clean example of it. Here's the VIX. Just the last, watch. 1, 2, 3, 4, 5. Today is the 6th trading day. Where did the VIX go the last couple of days? Took off to the upside. All right. Absolutely what we term parabolic. All right. It's just a wild slope to the upside. What did the marketplace do at the exact same time? Okay. It tanked. So I want you to remember this. All right. Markets go down, the VIX is up. Easy enough. A couple of myths of volatility. We've got to bust some myths of volatility. First of all, charting the VIX. Contrary to popular belief, looking at a chart on the VIX, which people do all the time, it's not going to tell you when or where volatility will strike. Maybe. Okay? It's not going to tell you anything. Look, if you want to look at a chart of the VIX all day long, let's go back over to the VIX. Okay, I like to make this interactive, so I'm going to use a live, trading platform. You can look back 3 years, you can look back 5 years, okay? And the fun thing is about looking at this, you're like, oh, I didn't see that one coming. Oh, I didn't see that one coming. Oh, I definitely didn't see that one coming. I'm like, oh, that hurt. Oh, you don't ever see them coming. That's why they call it volatility, right? It's like a train wreck that literally comes effectively out of nowhere. That's why people watch markets for years, because you never know when the good stuff is about to come, and that good stuff is the volatility, right? So looking at this, it's never going to tell you where volatility is going to strike. In fact, those that chart the VIX, you should also know that charting the VIX, it doesn't work because the equation that's used to determine the VIX, did you know it's been changed several times? People have no idea of this, right? This is a 5-year chart on the VIX. So some people will pull up and they do all this research about volatility, all this research. I'll debunk all of it. You know how I debunk all of it? Because they changed the equation. The VIX changed the calculation in 2014 was the last time. So if you've ever run a chart on the VIX, it doesn't really do much. Anything before 2014 would make it null and void. And yes, I am aware that every major financial news media outlet shows charts of the VIX comparing volatility for the last 20 years. Someone should tell them that the VIX, the most recent change of calculation came in, October 6, 2014. And this is what I call out with the old and in with the new. The new VIX calculation differs from the old calculation as much as plus or minus 10% every day. So all I'm saying in this is stop, believing in all this garbage. Like I can plan for volatility. I can see this and I can chart the VIX, and so much for charting the VIX or comparing it to the past. By the way, I even threw in the old VIX symbol is VIX-MO. VIX-MO. Now, let's get down, to trying to make some money in this thing. And that's really what we're here for. And again, I can't stress this enough. We had to have a little bit of background knowledge first. When I say a little bit of background knowledge, we have a little bit of background knowledge first, what volatility even is, right? And where we're kind of going with this, because we have to learn to make some money off it. Now, before I go too detailed into it, all right, a moment ago, I pulled up stuff like the SPX, and I told you, the VIX is good for a year, but listen, what the VIX can really help us do, like what it really helps us do, it says right there, over the next 31 days, okay, because the volatility is at close to 20%. Look, it says about 20%. That equates to $135 move. So in the end, okay, those that are a little bit more savvy understanding volatility, I want to piece this together for you a little bit. When I say those are a little bit more savvy, listen, those that get what the VIX is, we're going to talk about trading it in just a second. All right. But the bottom line, volatility can be calculated into movement and a time frame. What that just says is, hey, in the next 31 days, get ready to rock because we're going to move $135 higher or lower. It doesn't say whether it's going up or down. Like when you look at this, it just says we're going up 135 or we're going down 135. Okay. And we're supposed to stay in that range 68% of the time. Now, you go, is that for a year? No, that's for 31 days. Or I could do 29 days or 28 days or 24 days or 22 days. This is basically, okay, giving you a temperature of the marketplace every single step of the way. I want to give you something that, you got to sink your teeth into this. And now, okay, that you know a little bit about volatility, now I can show you how to profit from it. All right. First of all, buying call options on the VIX. Will it make money? Well, listen, I wanted to cover a couple of myths about volatility. And one of them is everybody tries to chart volatility and time things. It's impossible. By the way, I've done, literally tons of research on it and actually written part of a paper, a white paper that's out about VIX and trying to time VIX. It's just not going to work, right? Nobody sees the volatility coming. All right. There's always a couple of people like, I saw 2008 coming. I saw this coming. The broken clock can even be right. But buying call options in the VIX, is it going to make money? This is a very costly mistake made in the VIX options. Traders buy call options assuming volatility is going to go up, but there's no free lunch. You got to understand that even when volatility does go up, for those of you that understand call options, may not drastically increase in price, okay? Wild volatility swings are already priced into the VIX options, and buying calls can be a blatant reminder that there's no free lunch in the markets. I'm actually going to show you an old but good example here. This is a BREXIT example. By the way, this is the only example tonight that I did not have money into. Why didn't I have money into it? Because I'm actually showing you what not to do for a second. Here's an example, assuming you timed the purchase of call options perfectly before Brexit. I just want to make a quick point. Here's the VIX, right? This is actually 2016. The reason I'm bringing this up, this was an event that everybody knew about, like, oh, the Brexit vote, okay? Well, you could have gone out and purchased VIX options. Now, why am I talking about purchasing VIX options? Let's get down to that for a second, all right? Let's go back over here to the charts. Let's actually pull up the VIX. So listen, when it comes down to it, what happened in 2016, by the way, I can go directly back to a chart, all right, of that day and time, but neither here nor there. The point that I'm trying to make is even if you knew that this was going to happen, look, this is just the last 6 days. Let's say you knew that that was going to happen, okay? You could go out and you could try to buy options. Did you know you're barely going to make any money on them? Watch, okay? Here's before Brexit, which everybody kind of knew, right? You purchase the 19 calls for $2.90. You're anticipating what? The VIX to do just what I showed a moment ago on the screen, to spike. The VIX is going to spike. Will you make money? Yes, the VIX does spike. I just want to show you. The previous day, check this out. Previous day, the VIX was basically at 19, okay? Fast forward about 48 hours. Now, okay, the VIX flies, right? It's up to 22 and change. The 19 calls that you bought for $2.90, they do move up in price, but they go to a meager $4.80. All I'm showing you, okay, is it ain't worth the risk. Buying this call option did not work. So what I'm trying to point out here is even if you knew that volatility was coming, most people still will fall flat on their face. Okay? You cannot trade volatility with like the simple idea of like, let's just buy a call because volatility is going up. It doesn't work because I'm showing you right now. Okay? Here, look. One day, the VIX is at 19. Okay? Basically, the next day, the VIX spikes to 22 and change. But the options barely increased in price. All I'm showing you is this is perfect timing. Poor results. The aforementioned example, okay, it assumes near perfect timing on entering into the purchase of a call option of the VIX, but it still made a minimal percentage return. That's all I want you to get out of it, right? Everybody okay? That's all I wanted you to pick up is that, hey, listen, you think you're doing everything right. You know, oh, I timed the volatility going up. And did I make money? Yes. But did you make it like in that last strategy? You had $2.90 at risk. You think it was worth to risk $2.90 to come out with what? Right? $4 and change? Please. Are you insane? You lose that $2.90 because Brexit, okay? Brexit, everybody thought that vote was going the other way. And yet you still had $2.90 at risk. You cannot live in a world, all right, where you're risking, look at this, where you're risking $2.90, all right, on a wing and a prayer to be able to make what? $4.80? It's a meager return. I'm just going to show you what? Well, right place, wrong strategy. You had the timing right, okay, but you had the VIX. It's the wrong strategy. Now, this is the right strategy for the VIX. What if it could teach you a strategy whereby the out-of-pocket cost of the trade is zero? We're going to have zero out-of-pocket costs. You can make big potential percentage profits. That's what we want to do. A kicker on there. This only has to be placed a handful of times, okay, in a year. I'm going to say that again. We're not going to have any out-of-pocket cost. I want to try to make your out-of-pocket cost zero. There will be a little bit of margin. That's okay. Zero. We're going to have possibility and potential massive returns on it. But at the same time, the kicker, you only have to place it a couple times a year. Okay? Here's what you need to learn. There's several effective strategies in trading the VIX options, okay? Both to reduce risk, okay, and as a means to profit from a market decline. So I'm going to introduce you right now what we call a TheoTrade. It's a VIX volatility spread. I'm going to say it again. A VIX volatility spread. What this trade is. I'm going to leave it on the screen too, because I know a lot of people are looking at it like, oh, what? There's a lot going on over here. Calm down. We're going to show you the risk graph in just a second. Breathe, people, breathe. What I want to get down to is when you start looking at the strategy. First of all, this is on. When I say it's on, it's on. This is the actual trade that I have on right now. Look, July 12th, 2019. The trade was placed at 7:20. By the way, that is Pacific time, because I'm here in Arizona. We're on Pacific time right now. This trade was placed live in TheoTrade. Lots of our clientele have it on. It is considered a custom spread. What I am doing in this spread, okay, is for $0 up front. Is there risk? Yes. I'll get to the risk in just a second. What I'm effectively doing? Well, it's going to break down to this. Okay. This is the risk graph in the trade. The risk graph of the trade effectively does. Here we go. All right. Right here, okay, this strategy will make absolutely nothing. If the VIX, okay, is anywhere above, oh man, I just drew over it, okay? Right? I'm using a different drawing tool now, okay? Right there. If the VIX hits 18, or above, this strategy will start to make money all the way up, okay, to the 23 level. Again, this strategy, okay, has degrees of profitability anywhere from the VIX being at 18 all the way to 23. You can see the profitability. How much can the strategy make? One contract can make as much as $500. There's the profit and loss graph. It's right there. Again, this is not an example. It is a live trade. It's on right here, right now. Okay. To further this example, if you take a look right here, I don't make anything, but I don't lose anything. Now, how can I actually lose on the strategy? How can I lose in the strategy? Right there. When the volatility goes down below about 14, okay, minimal risk if the VIX is under 14. Now, it's been, if you take a look at the VIX, okay, if you take a look at the VIX on this strategy, let's actually kind of zoom out, all right? Here we are. Now, the VIX at 14, that is where I would start to lose a little bit of money on the one that I have on right now. So, again, I kind of want to zoom in. On it just so you guys can see the most recent strategy that I have. The only way you're losing money is right about there. Whoops. I'm trying to, a nice straight line. It would help if I could do a nice straight line. Oh, it's killing me. Right there. That's where you would start to lose money. Okay. There are only minimal bouts. By the way, if the VIX crosses below 14, you don't have to close this. You can kind of wait for the VIX to go back up a little bit. Again, it is a wonderful strategy. Now, how, okay, and why would I put this on? One of the first things I want to go back to, all right, before we go any further, is I want you to see that the strategy, first of all, was placed in July and extends all the way into what? September. So we have all of July, all of August, okay, and what? September. So the strategy is what? July, August, okay, some of September, September 18th. You're looking at almost a full quarter. So the trade may only have to be placed quarterly. Anytime, I want you to think about this, anytime in the next 3 months, all you need is volatility to go where? Boop, up. That's it. Let me look back at the VIX for a second. Just look back over the last, I don't know, here. That's the last 9 months, okay? Has the VIX gone up at all in the last 9 months? It spiked huge here. Then it did absolutely nothing. It spiked there. That's enough to be profitable. Then it did nothing. It spiked there, okay? If you had this strategy on over the last 9 months, there are 3 occasions where the strategy is definitively profitable. I'm also going to make this very clear. I made money in all 3 of them, okay? I can back up a little bit, okay? We can go a year. You want to go further than that? I can go over 3 years. Every major occurrence of volatility, anytime in the last, okay, 3 to 5 years, I can show you where I had the strategy on and made money. All I did is have the strategy on. People go, when do you have it on? I always have it on. Why wouldn't you have it on? But it comes off when you make money. Then what do? You put it back on. Pretty easy. All right. Now, it's got a massive reward. Okay. Very, very minimal risk. And the risk, we can further mitigate this by just knowing, okay, the duration for the trade. Let me go back one more time over here because this trade is for September. This one is on right now. What did I pay? Again, there was 0 out-of-pocket costs. All right. When I say somebody's already asking, like, how much did it cost? It didn't cost anything up front. Does it have risk? It could have risk in here. But if the volatility goes up anytime in the next 3 months, all you have to do is go, I don't want to take risk. And you just exit the strategy. All right. It's very easy to control your risk. Now, this strategy can be used for one of 2 things. Anytime that the volatility, remember, that's what we're talking about. The volatility goes up, okay? You could either profit from it, or if the volatility goes up, you're using this as a hedge. Okay, when I say a hedge, what's a hedge? You're using this to reduce risk. If you right now have, okay, if you have a sizable, for instance, 401k, you absolutely unequivocally need this strategy right now. Why? Because if the 401k goes down in value, this is going to help you, right? It's going to offset it. You go, $500 is good. Did I say you had to do $500 worth? Okay, heck no. Remember earlier, I made a kind of a bold statement. Every trading firm on the planet has these on. Okay, every trading firm on the planet has these on. You can see mine right here. right? You think this is new? This is, learned this at a trading firm, 22 years ago. Look at the open interest in the VIX. Like, who do you think has 200,000 or 250,000 contracts? You want to get really crazy? Let's get crazy. You want to get nuts? 150,000 contracts, 28,000. This is just some random September crap, right? Get really crazy. Go out to October. October already. They're already hedging. Somebody has 150,000 contracts on of the 40 calls. They're hedges, people. Okay, they are versions. These are all versions of a VIX volatility spread. There's actually a really famous trader. They actually call him right now 50 Cent. He's actually using a variance of this strategy. He's actually selling options to finance the cost of other options. And if the volatility spikes, they make huge money. It's actually a big trading firm that's doing that. But one contract can make as much as $500. And I've got the strategy on right now, and it is profitable, right? I mean, how profitable is it? Look, right? I still have 42 days left. 42 days, okay? 42 days to laugh, to cry. But you can see the option right here. You see where that says POS? It stands for position. That's the option I bought. That's the option I sold. The other options, those things are so far out of the money, I'm going to close those. I don't have no risk. I'll have no risk in this strategy. The only thing I can do is make money. All I have to do is close this little option right there. Okay? I just got to close one option right here. No risk. It's a riskless trade at that point. Okay? It's nothing but gravy. And if the volatility picks up even more than it has, it's already crazy, but picks up any more, this thing is going to go out huge. This is the stuff, that you guys need to learn. And as I said, and I made a bold statement, anytime in the last couple of years, if there's been a volatility event, I am on it. I am all over it. And every one, of the TheoTrade clients has been involved to it. Here, I'm actually going to show you literally like my live trades. Here's one from August 9th, 2018. Apparently I put it on at 7:10 in the morning. I closed this one, October 11th, 2018. Now, let me ask you something. Last summer, that's almost a year ago, I wanted to show you trades more recent, the last year. Every single volatility event in the last year, I caught all of it. I didn't catch a piece of it. I caught all of it. Every one of them. Did you think that huge volatility was coming in August? August 9th of last year. Like, what did the market look? Oh, it was docile. Yeah, it was docile until it actually, Here is October 11th. This is actually just the beginning. I actually opened that for a credit. I closed it for a bigger credit. So net, what did I make? I had negligible amounts of risk. Made how much? $2.65 plus the 10 cents. So I made $2.75 on the trade. How many contracts? Do as many contracts as you want. You want to do 100 lot? Good, go for it. It's $25,000. That, was August into October. And somebody was like, man, you should have held that spread into December. I'm not new. All right, next one that I did. This is one where I opened one in January. Things got, calmed down a little bit. So I just opened up another one in January. Closed it in March. Here's one that I opened for absolutely nothing. Again, this is just a little variation of the VIX volatility spread. I opened it for nothing. That is the real trade, the exact trade time. In March, I closed it for a $3.47 credit. All right. Again, there's the options I traded, the exact strikes. You can see I just traded out of the call spread. It's huge. $3.47 credit. All right. As I said, every single instance of volatility I've caught. Next one. We're getting a little bit more caught up over here. The next one coming into this. Well, now we're actually this year. Here we are in March. In March, did you see any volatility coming this March? No. By May, oh yeah, the volatility was all over us by May. In this particular case, I opened it for a 10-cent credit. I closed it for a $3.31 credit. It's another VIX volatility spread. The exact dates and times are effectively on there. So now we're actually caught all the way up to May. The last time that we saw big volatility, go look at the chart. Come over to the VIX. Let's zoom in here. This is this year, right? This is this year. So we caught the move back in October here. Then I actually caught a brief spike. All it takes is these little brief spikes. I actually caught a brief spike of volatility. We caught all of this one. We caught all of this one, and here we are today. Here we are today. Where am I today? Well, here's my opening position. It was opened in July. Okay. Did you see any volatility in July? July 15th, July 15th. When did I open it? Oh, I opened it right there. Where are we today? Right up here. Okay. Ready to be closed profitably. How profitably? I don't know. I got a lot of time left. As I showed you a moment ago, okay, when it came to time, I have 42 days left. I'm going to laugh and I'm going to cry, right? And people are already asking the right questions. How do you know when to close this? How do you know, how's the risk calculated in this trade? Okay, we show you all of that. That's what this is about, okay? Here's some of the characteristics of the VIX volatility spread. The attributes of the VIX volatility spread, they're totally undeniable. You're risking 1 to approximately make 4. By the way, there's about a 60% probability of not losing anything in the trade. You can have some risk, okay? But we'll show you how to mitigate that risk. The VIX volatility spread, it can work in down markets. It can work in neutral markets. It can actually even work in trending bullish markets. Because even trending bullish markets have what? Little volatility aberrations along the way. That's all we've seen. Look, go back to the chart. All right? Listen, this is this year, okay? This year, zoom in, sorry. There's the last, 9 months. That was wild. That little volatility aberration was enough to be hugely profitable. Okay? This little volatility over here, hugely profitable. Don't listen, just look back, okay, at the trades. Look back at the trades. I closed one of these things on March 1st. March 1st. Do you want to see March 1st? Do you even see it on here? Okay? It's like a little miniature spike in volatility. There you go. That was enough. Okay? Right in this neighborhood in here. Okay? There was nothing. But it's still enough to make the spread worthwhile. It's still enough to make the spread worthwhile. You got to realize that. Okay? Moving on. So you're going out there, the VIX volatility spread, it can work, again, in various markets. You pay nothing up front for the VIX trade. You don't pay anything up front. You see that. Okay? You never have to buy stock, okay, or worry about option assignment risks. There's no options assignment in the VIX. The VIX is what they call a cash-settled product. Your risk is minimal. There's no stop orders. It's an excellent tool for those looking to kind of hit a home run, but it's also an excellent tool if you want to control risk on a 401k, on an IRA, on any type of retirement account. Building the VIX volatility spread, this is what you need to know. First of all, do not let these options intimidate you. Like, you got to look at options. It's like the mother of all power saws. Used correctly, it's really effective in creating returns. Use a power saw incorrectly, you're probably going to lop off a couple of fingers. The VIX volatility spread, the VIX itself, I kind of call this, it's pretty much the mother of all products. Right there with the SPX, this is the mother of all products. The VIX volatility spread, it's being done for nothing up front. And I can show you everything, okay, that can go right with this trade and everything that can go wrong with it. Before I get there, okay, I just wanted to throw out, this is what our customers are saying. TheoTrade is a rare service in this industry and offers tremendous value. It's been an amazing past 6 months, so keep up the great work. All right? Here's another one. I've learned so much in the past few months. My trading has taken a whole new level since joining you in January. Okay? Do not fear the VIX volatility spread. Maybe you don't know about options. Maybe you have limited experience in placing options. We can show you precisely how, when, and where to place this. It does take a couple of hours. So I don't want to hedge around that. Like, are you willing to put in a couple of hours? What we do here at TheoTrade is we create detailed recipes for every single strategy, including, of course, the VIX volatility spread. You wouldn't bake a cake without a recipe. Don't trade without one. It's that easy, right? So we can actually take you through step by step by step. I don't want people to run out and to say, I got it. Listen, let me ask you something. Do you think, okay, that if you put this trade on, okay, without the proper criteria, without the proper guidelines, that you might make a mistake, right? And that mistake could cost you hundreds, even thousands of dollars. Because the next question that always comes up is, why doesn't everybody do this? because everybody doesn't know how to do it. They don't know the criteria. How do you determine the trade setup? What expiration do I select? What strikes do I use? The position size. What's the correct probability for the trade? How do I execute the trade? Execute means send it. When do I exit? What do I do with a losing position? Okay. How much capital do I allocate? That's what we do here. We build criteria. We build checklists. It's what we do. That's what TheoTrade is. Trading, you'll find out if you're in this business long enough. It's about answering the what ifs. What if the markets rally? What if the markets tank? What do I do with a losing position? What strike price options do I buy? Do I sell? How many of them? Right? How much capital would you commit to the VIX volatility spread? We've got the answer to all the trading. We'll give you the probability for the trade, how many contracts to use for the account size. There's literally, okay, an entire section of saying like, how many contracts do I trade if I have a $2,000 account, if I have a $5,000 account, if I've got a $10,000 account, if I've got a $50,000 account, it'll tell you, okay? When do I close my VIX volatility spread? If the markets sell off big, the correct return for the strategy. How many contracts might I use to hedge my retirement account? Your 401k. It's like the most important thing. And you know what? I had somebody the other day that shot me an email. And this is actually yesterday, in the midst, okay, of part of the hideous move. And they go, I'm down on my portfolio, 0.27%. By the way, this gentleman actually shot me the email. He was down 0.27, 0.27, not 3%, because the marketplace yesterday was down 3%. You want to know why? Because he actually hedged using a VIX volatility spread. Can you fix a losing trade? That's what this is about. We've got the answers. Got the answer to all your trade-related questions, all the variables. Okay, we just build detailed recipes, definitive criteria, checklists, if you will. Each strategy, each unique variable you're going to encounter. It's the how, it's the when, it's the why, it's at what price. I'm telling you, though, that's just the beginning. It's just the beginning of the variables that you're going to face while buying a VIX volatility spread. You need to know how to use this product. You need to know how to use it effectively. And this is the way that people feel when they trade. I mean, it just is. That's the way people feel when they trade, especially when they see something like the VIX, which can be construed as like, it's a very convoluted product, but it's not. It's not. We make it easy, okay? The secret, it's in the sauce. Again, people think to themselves, I can read about VIX volatility spreads anywhere. As I said a moment ago, you can. You can read everything you want. There's probably 1,000 different things to read right now in a Google search. But what it's not going to have what we spent years fine-tuning. You have to recognize that here at TheoTrade, we don't just sit down and like, oh, let's sit around and work out a recipe for this stuff. Okay? I ran education for TD Ameritrade. At the time that I was there, it was the largest education firm, right, on the entire planet. We had access, okay, to millions and millions of accounts. At the time I was there, we had over 7 million accounts. We used to actually study what works and what doesn't. When you look at the criteria, when you think about steps of criteria, we base that, okay, not just on what we know, not our own capital and our own knowledge. We base it on having studied over 7 million brokerage accounts. Okay, that's what we do here. All right, we build criteria, and that's what the VIX volatility spread is about. In this case, here's trading VIX options. This is the curriculum. By the way, we have a class. Okay, we have a class. The class is $197. It's a 3-hour course. It's available immediately, right? But before I get there, this is the curriculum for that class. You can use VIX options to take risk. What? Risk 1 to be able to make 4, right? Minimize risk. Okay? How you can really hedge like a professional, gauge overall market risk, all right, by looking deep into the volatility of VIX options. VIX options tell you a lot. We're going to teach you entry and exit criteria. You got to be consistent in this strategy. You're also going to learn how to use set it and forget it, what they call good till canceled trades, all right? And strategy is you don't have to sit there and monitor this stuff. Perfect for traders that can't necessarily watch markets. We're going to show you how to trade VIX options, all right, for high potential return, again, minimal risk. How VIX options can be traded in a retirement account so you can protect your nest egg. How you can substantially reduce 401k, IRA, or long stock portfolios, right? You got to reduce risk on those portfolios. And how these trades can be done with a small account, really a account size of any size. if you're looking for big profitability, big returns, okay, with minimal risk, this is what you want to do. All right, we're going to tell you what strikes, what expiration period, all of it. We're not going to leave anything, all right, in terms of guesswork in this course. As I said, the class, it's $197. It's a 3-hour course, but there's some background knowledge to it, and we'll give you, okay, all the background knowledge. Now, the class slide deck, it includes all the entry and exit criteria. That's available immediately for download. You sign up for $197 right here, right now, okay? You get to download what? All of the course criteria, okay? And then you actually stream the course. Now, the course is archived. It's 24/7 access. You can download the course to our TheoTrade mobile application. If you want to watch it like on an iPad or an Android or your phone, you can do that, okay? Last but definitely not least, the course qualifies you for a reduced commission rate. Now, I'm going to throw this out. For $197, why do we do that? Okay. Number one, we want to introduce you to TheoTrade. There's no question. We want to introduce you to TheoTrade. Okay. Number two, we know that you're going to be so blown away after you've gone through this course, okay, that, you're going to look at everything that TheoTrade has to offer. We also give you a discounted commission rate, right? $197. It's worth it just for the discounted commission rate. The commission rate, okay, we have negotiated rates at E-Trade. We have negotiated rates at TD Ameritrade. Even if you have an account, you don't have to open up a new account. We have negotiated rates. But I'm going to tell you, do you think it's worth it? Would it have saved you, okay, $197 just in the last couple of days having had this on, okay? Or a better question, would you have made more than $197 with this strategy on, okay? I'm going to tell you unequivocally yes, because if you had the exact trade that I had on, it's up, okay, on one contract more than $200. It pays for itself. We have a little bit of a deal on this evening because we feel that every time that somebody comes out, okay, to one of these events, all right, you're here tonight, you're live, you come out to one of these events, everybody that comes out, you earn the t-shirt, baby. You've been there and you've done that. And we always feel that, like everybody tunes in, right? I've been through this and I've been through the gauntlet of paid classes, okay? Be honest. Hop in here in the chat room, or if you're even watching this on a recording, how many of you have actually been through the gauntlet of classes and indicators and secret squirrel black boxes and all the other crap that's out there? I don't mind saying that. But then you find, here, come to TheoTrade, do this, do that. Listen, it's ridiculous. You only find out, let's buy one more thing. Okay, but wait, there's more. TheoTrade has just had enough. It's enough of all the educational garbage, all the educational sales pitches, okay? We're putting an end to it. That's where we say, you've been there, you've done that. Okay, we're designed to disrupt financial education. That's what we do here. We're built by professional traders. Everybody here has a minimum of 15 years of experience. There's no professional salespeople. No one that works here ever sold anything. Okay, I ran the largest stock market education company on the planet for 5 years. Never sold anything. Not a one. Okay. It's not, listen, what we do here is we educate you. And when you have found out that you've been through all the garbage and everything else out there, okay, you're going to find out that educating you, it's our only goal, and we demonstrate that. We will prove that to you. Hopefully this forever changes the way that you view education, because we introduce what we term the Netflix for traders. It's TotalTheo unlimited streaming monthly membership. What does it do? It's access to everything. What's everything? Everything. We'll give you access to what's currently an archive of 83 trading classes. Everything's available immediately. It's on demand. TheoTrade mobile application. That will include, and I want to make that clear, this will include the VIX trading course. It's included in there, but it also includes the infinity spreads. High probability trading with in-out spreads, guide to selling high probability spreads, iron condors, selling premium, minimize your risk, survive and thrive in extreme volatility. You think you need that one? Okay, I think that's worth it. Okay, day trading NASDAQ futures, covered calls, essential skills for consistency, top 10 trading skills, pairs trading. There's 83 courses. This is just a smattering. It's access to over $5,000 in classes alone. I'm going to stop you right there. Okay, most of you probably would have brought in a couple of grand had you had actually taken the Trading VIX options course. It's timely, right? Just the last couple of days, volatility spiked. That's it. All you need is one spike in volatility. This class is going to pay for itself. Now, that's the 83 trading classes, but we're not done. We're going to give you access to 59 proprietary indicators and scans. Auto expected move. Okay, S&P gravity points. Guys, listen, if you know anything about TheoTrade, okay, everybody in this industry talks now about these gravity points. We give them to you. We'll just give you the gravity points. They will give you literally, there's a sharing link. Okay, I will give you the exact numbers to all gravity points, okay, in the S&Ps. We give you Quantix, NQ levels, next generation squeeze, okay, every study, every access to everything that we ever use on a day-to-day basis. We don't charge you anymore for indicators and scans. It's $1,800 plus an indicator. You get it immediately. You get access to every single one of them. You don't have to wait. In addition to it, we give you free coaching, okay, live trades, and emailed trade ideas. Meaning we actually email out trade ideas. We have a live trading chat room. We broadcast 6 hours a day. I'm going to show you what it looks like in a moment. You know, there's a lot of trading chat rooms. The trading chat rooms, they'll be $400 or $500 a month. That's part of TheoTrade. Okay? Coaching is part of TheoTrade. Right? Emailing trade ideas, it's part of TheoTrade. It's access to over $2,000 support, trades, and insight. Again, we have daily coaching sessions. There's 4 distinct trading portfolios, right? And we'll use these VIX volatility spreads. We'll use infinity spreads, right? And our instructors will directly answer your trading questions via email, including myself. Okay? Let me ask you. There, right? You send me an email in the next 24 hours, I'll answer it. Okay? What do you think it's worth? A couple of $100? You ask any trading question, we will answer it. Any trading question. If I can't answer it, believe me. Okay? We have 6 other instructors that absolutely unequivocally can. Right? All of it. What do we have? TotalTheo Unlimited. It's $99 per month. It's $99 a month. There's no contracts. There's no minimum. It's 1 month at a time. People always ask, like, do you have an introduction? Yeah, it's $99. Okay? Try out a month. Okay? It includes the Trading VIX options course, 83 classes, new monthly classes. By the way, every single month, we're adding new classes. Live trading chat room. That's 6 hours a day. Everything's archived 24/7. Come on. You can't necessarily make it to 6 hours a day. Like, I get it. We email you out trades, though. Okay. We have push notifications on our mobile apps. We have trading indicators and scans, daily coaching sessions, email support. Yes, you can email us, right? And our mobile application. It's all under theotrade.com/all. Okay. This is designed, again, to be the Netflix. You don't have to go anywhere else. And it just keeps coming. All right? What our members are saying. TheoTrade is the best service out there. Okay? If there's anyone interested in trading, I always tell them about TheoTrade. You guys are the absolute best. Okay? That's just how I feel about it. I've learned so much from you guys. Thanks for all you do. It's from Joel. Okay, I also want to say that I love your product. Just wish I had been around, okay, when I was starting out a few years back. It's well thought out, covers different trading styles, emphasizes risk reward. That's why it's so important and teaches you how to trade, like, different products. Thank you all at TheoTrade. You're doing a great job. Here's one other one I love over here is, by the way, you guys are rocking it. Okay, it's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach. That's why I say it's the Netflix for trading, right? And we make this available to you because some people are just adamant. Some people are adamant. They say, I don't want to pay $99. Okay, you can take, the Trading VIX options course. We will charge you a one-time fee of $197, okay? But we would rather do what? Just have $99 a month. We're giving you $100. Take the money. Why do we do that? Why do we give you, $99 a month? Because we're so sure that you're going to love everything that we offer in here. Okay, 83 classes and so forth. That it's worth it to us. It's worth it to us. We lose money when you first come on board. Why? Because we know that you're going to love this so much that you're going to be a member, hopefully, for more than 1 month. Again, you can cancel anytime. Now, with that. This is another one of the members over here. Thanks for taking the time to answer my questions. With the lowered commission rate of blank, I can't tell you the commission rate live, but the commission rate is low enough per contract. It just takes 8 round trips, 1 option contract trades to save the $99. This is before you talk about all the services that you're offering for the membership. I'm telling you, the commission savings alone, okay, is going to pay for this class. The web address is theotrade.com/all. Now I'm going to show you a couple things, okay? I'm going to show you a few things in here and in TheoTrade, and then I'm going to answer a couple of more questions for you. Okay, a couple things. This, all right? This is TheoTrade. If you're kind of curious what the site looks like. All right, welcome to TheoTrade. First of all, this is our live chat room. Obviously, we're not broadcasting right now, but this is what it looks like. This is all of our clients talking. They're talking. Right now, they're talking. We don't shut it down at night. Okay? Thanks for the heads up over here. You guys, listen, you can read some of the stuff that goes on. We share stuff. This is Tony Rago. Tony's actually in here, obviously, tonight, talking about different trades and so forth. That's what it looks like. Next, we come to start here. If you're brand new to this business, you have no idea what an option even is. Listen, options 101, options, 201. It's everything that you're going to need to get ramped up. But I'm going to tell you right now, it's a little overwhelming to look at some of this. But we believe that you'd rather be overwhelmed rather than underwhelmed. As I said, the first time you go into Netflix, you don't have the intent of watching everything on Netflix. Okay? And maybe you don't want to trade options. I get it. If you don't want to trade options, check this out. Okay? You can come in here. Here's the class archive. There's option strategies, but there's day trading classes. There's technical analysis. Okay, there's stock-only classes, there's futures classes, there's hedging strategies, there's trend trading classes, there's mindset classes, pairs trading. If there's a genre of trade that you're into, we offer it. And the $99 a month gives you access to all of it. There are, 4 portfolios in here, access to the archives, Corey's Corner. I'll tell you what, Corey's Corner, that's worth $99 alone. Okay, each evening he's giving you a very definitive setup. I'm going to pull it up. Okay, I'll pull it up here momentarily. Then we come to the home screen. Okay, what's in the home screen? You can search any of the archives, like search for volatility. I just typed that in there a moment ago. So a quick search for volatility, what does it turn up? Okay, bond auction ignites volatility. All right, volatility up with the market up. That's an unusual one. Everything that you need, okay, to build yourself into a trader is here at TheoTrade. Everything that you're going to need. All right, here's actually the site itself. It's TheoTrade. Again, I want to throw the address up, and then we're going to come in here. We're going to answer a few questions. By the way, we are here, all right, live right now to answer those questions. But yes, this includes the VIX options course. I just saw that question come up. It is theotrade.com/ALL. When it says it here, yes, we're here to actually answer some questions. All support is hands on deck over there. So let's go through, let's answer a couple of these questions right now. All right. One of the first things that always comes up, it's a subscription for $99 a month. You can cancel anytime. All right. Then somebody said, can you show what you have in futures classes? Well, I can tell you one thing. There's nothing. Okay, that's going to be comparable to what we do in those futures classes. They are quite spectacular. So if you come down to the classes archive, right? Apologize here. I'm going to have to log back in. But if you come back down to our classes archive and take a quick glance, all right, and log back in because I had timed out in there. All right, back to our class archives. Okay. If you want futures classes, yeah, we've got futures classes. Futures 101, NASDAQ futures classes, okay? What products to watch and why, high probability intraday trading system, in-queue trading. There's actually a volatility futures class, intraday trading classes, and beginner's guide to trading intraday. So there's a whole lot on the futures front. All right, onward and upward. Let me lock that in there. Again, it's theotrade.com/all. Okay. As I was saying in here, you can cancel anytime. It's $99. Just shoot us an email if you ever need to get out of TheoTrade. Listen, we realize at $99, anybody and everybody, okay, can be a member of TheoTrade. It levels the entire playing field. You will not find any other course material, okay, that's going to be comparable to this at any price. There was, years ago at TD Ameritrade, there was a course that we did. It was an 18-month course. We charged, and some of you probably took this. We charged over $24,000 $24,000 for it. Okay. Now, again, I ran the education group. I didn't sell those things for $24,000. I thought it was the most ridiculous thing ever. What we do here at TheoTrade blows it away. You know how I know that? Because Brandon Chapman, one of our primary instructors here, he wrote the book for that course. Now we've actually got him writing a lot of the course material over here. It'll absolutely blow it away. And it was 24 grand. And for those of you that took that course, you know exactly what I'm talking about. It's an 18-month long course. Okay. Now we're doing more for $99 a month. Okay. And if after a month you don't love us, okay, we get it. We'll part ways. Hey, we hope that even a couple of months from there, you're like, hey, you know what? People will leave TheoTrade. They always come back. They always come back because there's nothing else out here comparable at any price point. Now, another thing people are asking here. Oh, if you need approval for options, we can help with that. No question. All the strategies that we're doing here, we can do in the IRA. Okay. You could do this in an IRA, a retirement account. All the classes are recorded. Every day, every second of every day is recorded live. Okay. So easy enough. All right. Moving along over here. Oh, somebody said, can I access Don in the future? Yeah, support at TheoTrade.com. I don't mind that. And by the way, all the other instructors as well, just support at TheoTrade.com. Please, I encourage you. By the way, the email address is right in the upper, okay? It's in the upper right-hand corner. It's right up here. I'll just highlight it for you there for a second. That's how you get a hold of me after tonight. And listen, sign up this evening. Okay, sign up this evening. Fire an email to me. I don't mind. I'll sit there and watch the email queue. Okay? I mean, listen, we answer hundreds of emails a day. Literally, between the instructors, hundreds of emails a day. We can handle it. So shoot us an email. It doesn't even have to have necessarily a question, just to know we're real, we're alive, we're there. Okay? And we're going to answer those questions for you. All right. Now, by the way, the educational material, somebody was saying, can you download? You can download. All right. You can download onto the mobile applications. So you can watch us and download us onto the mobile application, and you can download. All right. You can actually download all of the actual slide decks. So yes, you can do that. If you're up in an airplane, then you can actually watch the download version. It works exactly like Netflix. Okay. All right. Moving onward and upward. Another question that came in here. Can you reach the other? Yeah, I do have other classes. By the way, we have, as I said, right now there's 83 or 80. There's about to be 84 classes. We know the class coming out over here. The class tonight on the VIX Volatility, this is what's pertinent today. This is what you need to know. And I stress that time and again. So with that, I'm going to type a few more answers in over here. By the way, yeah, we can help you. We can help you with the other brokerage platforms as well. I spent 15 years in the brokerage industry, really familiar with everybody, okay, throughout the brokerage industry. No problem whatsoever. So it's wherever you're comfortable trading, we can actually help you there. Again, tonight, it's important. It's TheoTrade.com/ALL. Sign up for it tonight. Shoot us an email. By the way, we start in the morning. If you can make it live, we start at 8:22 a.m. Central Time. Okay, we start 8 minutes before the bell goes off. And I got to tell you, okay, you should strap in because we're going to have a whole lot more volatility kind of coming to a theater near you in the days to come. With that, again, pop the address up there one last time. It's TheoTrade.com/all. Thanks everybody for joining us this evening. Have a wonderful evening. We'll see you in TheoTrade live in the morning. Bye-bye.